All right, so want the scoop on what went down in the U.S. market on January 10th, 2025, and what might be coming our way on Monday the 13th. We've got a ton of financial news, analyst reports, even a pretty crazy story about a CEO's salary ready to dive into.
It's wild how one single day in the market can be impacted by so many things. Employment numbers, Bitcoin ETFs, you name it.
Right, like solving a puzzle where the pieces are always moving.
A constantly shifting puzzle, exactly, and that's what makes it so interesting. So let's start with the big picture. How'd the U.S. market actually do on Friday?
And spoiler alert, not a good day if you're easily spooked.
Definitely not. The Dow Jones, well, it plunged almost 700 points. The S&P 500 and NASDAQ 100 each dropped about 1.5%.
Ouch. I know the market goes up and down, but 700 points on the Dow, that's gotta hurt.
Makes you pay attention, that's for sure. But let's look at the whole picture. Well, Friday was rough. The US 500, that's the main stock market index, is only down 0.88% since the year started.
Okay, so not a total disaster yet. But those drops on Friday, people must be nervous heading into next week, right?
Absolutely. And a big reason for those nerves is a report that, at first glance, seemed like good news, the December jobs report.
The one that blew all the predictions out of the water.
That's the one, 256,000 new jobs, unemployment down to 4.1%. Typically, numbers like that would send the market way up. But this time, it did the opposite.
So people are just pessimists. Why the bad reaction?
Not necessarily. The stock market, it often reacts to what it thinks will happen in the future, right? And here, investors are worried this strong jobs report might make the Federal Reserve keep interest rates higher for longer.
To fight inflation, right? Because the strong job market could mean the economy is getting too hot.
Exactly. When interest rates are high, it costs companies more to borrow money, which can slow down growth and hurt stock prices.
So good news about jobs leads to worries about interest rates. It's a chain reaction.
That's the market for you. Always unpredictable. But hey, it wasn't all doom and gloom on Friday. Some bright spots, especially with cryptocurrency.
We're talking Bitcoin, right?
Yeah.
It's been on a tear.
It has. Bitcoin went over $47,000 on Friday, its highest in 21 months. A lot of this excitement, it's tied to those potential U.S. regulatory approvals for Bitcoin ETFs, those exchange-traded funds.
So what are these Bitcoin ETFs and why is everyone so hyped about them?
Imagine investing in Bitcoin as easily as you invest in stocks. That's what a Bitcoin ETF would do. Open the door for way more people to get into cryptocurrency, which could push demand and prices way up.
Makes sense. And it's not just small players, right? Some big names are pushing for this.
Huge names. BlackRock, ARK, Fidelity, they all want their Bitcoin ETFs approved. Decisions from U.S. regulators could come this week, so everyone's waiting to see what happens.
Bitcoin could either skyrocket or crash, depending on what those regulators say. Talk about a cliffhanger. But before we go too deep into crypto, another story caught my eye. It speaks to a bigger issue that's been brewing.
You're talking about that CEO salary story, the one that's been all over the news.
Exactly. Denise Coates, the CEO of Bet365 Group, got a huge raise, putting her annual salary over £220 million. That's, well, let's just say it's way more than most people make.
Definitely a head-turning number, especially since Bet365 reported a pre-tax operating loss this year.
A loss. So the company's not doing so well, but the CEO gets a massive raise. Something doesn't add up.
It raises questions about how they decide on executive pay and whether it always matches how the company's actually performing. Stories like this bring up issues about income inequality and how companies are governed.
It's like the stock market with its ups and downs, and the everyday lives of the people working for these companies are on totally different planets.
Sometimes it feels that way. But these worlds are connected, believe it or not. This CEO salary story. It could impact how investors feel about Bet365 and even start bigger conversations about fair pay.
Good reminder that behind all those market numbers and financial reports, there are real people and real consequences. And speaking of connections, we can't forget about what's happening globally, those forces that shape the U.S. market.
Absolutely. Friday's events, they weren't just a U.S. thing. The impact of that jobs report was felt all over the world, affecting currencies and bond markets.
So what were some of the big global developments that stood out to you?
Well, the British pound, or sterling, dropped after that U.S. jobs data came out, hit a 14-month low. We also saw 30-year UK government bonds reach their highest point since July 1998.
Wow, those ripples really traveled far. What else caught your eye?
China's Shanghai Composite Index, it fell 1.42%. Shows a mix of concerns, from their own economic recovery to those ongoing geopolitical tensions. And then you've got those big tech companies, Amazon, Google, Microsoft, setting up shop in Saudi Arabia.
Interesting. Why are those tech giants heading to Saudi Arabia?
Seems like a few reasons. Saudi Arabia is offering some pretty sweet deals, like tax breaks, to attract them. They also want to boost their own economy and become a tech hub. And for the tech companies, it's a chance to tap into a whole new market.
Could be a win-win, but I'm sure there's some complicated issues too.
For sure. Things like human rights and censorship, those are big factors these companies have to think about as they move into this region.
So we've got this tangled web of factors. U.S. economic data shaking things up globally, crypto on the edge of big wins or losses, and ethical questions mixed in with business decisions. It's a lot to process.
It is. And we've only just scratched the surface.
Yeah.
But understanding these interconnected pieces, that's how we make sense of what happened in the U.S. market on Friday and what might happen next.
And that's what we're here for, right? To help our listeners make sense of it all. And speaking of what's next, there's so much more to talk about when it comes to Monday and what you should be watching for.
Exactly. We'll be looking at potential opportunities, market trends to keep an eye on, actionable insights to help you navigate the week ahead. So stick with us.
Okay, so we've covered a lot of ground here. A wild ride in the U.S. market, a jobs report that kind of threw everyone off, and we even touched on Bitcoin and those CEO salaries. But I'm really curious about what this means for Monday.
Great point. Understanding what happened is important, but it's just as important to look ahead, see what might be coming next.
Exactly. So what should we be watching for on Monday? What could make or break the market's mood?
Well, for one, everyone will be watching the Federal Reserve. Remember that jobs report we talked about, the one that had investors worried because it might lead to higher interest rates?
Yeah, that was a real surprise. Anything specific we should be looking for from the Fed?
It's not necessarily about announcements or decisions right now, but watch for any hints or signals they give about how they're thinking about inflation and interest rates. What they say can really affect how the market feels.
So read between the lines. Got it. What else is on our radar?
Those Bitcoin ETF decisions we talked about, BlackRock, ARK, Fidelity, they're all waiting to see if their Bitcoin ETFs get approved by U.S. regulators. Those decisions could come any day, and they can have a huge impact on the crypto market.
It's like waiting for election results, right?
Mm-hmm.
All that anticipation. If those ETFs are approved, what could happen?
It could be a game changer. For crypto approval would make it a lot easier for regular investors to get into Bitcoin, which could mean more demand and higher prices. It could also make Bitcoin seem more legitimate to big institutional investors who haven't been jumping in until now.
So Bitcoin could boom if those ETFs get approved. Exciting times for crypto. But let's not forget those global factors we mentioned. Any developments there that we should be watching?
Definitely keep an eye on China. Their economic slowdown could affect global trade and growth. Anything they say or any data they release could impact the market on Monday.
How about Saudi Arabia? We talked about those tech giants moving in. Anything to watch there?
Definitely. It's important to see how those companies deal with the challenges of operating in that region. Any news about their progress, partnerships, or problems could show us how this tech landscape is changing.
Okay, so we've got the Fed's words being scrutinized, those Bitcoin ETF decisions on the horizon, and we're keeping an eye on China and Saudi Arabia. A lot to keep track of. But before we move on, I have to go back to that CEO salary story. Really got me thinking.
I'm glad you brought that up. It's something that goes beyond just one company or one industry.
Exactly. What can everyday investors like me learn from that story? How can we use those lessons when we make investment decisions?
It shows how important it is to look beyond a company's financial performance and also consider their corporate governance. How is the company being run? Are executives being paid fairly in a way that makes sense for the people who own the company's stock?
So don't just look at the numbers, look at the bigger picture of how a company operates and treats its stakeholders.
Exactly. When you buy stock in a company, you're not just buying shares, you're becoming a part owner. You have a voice. Don't be afraid to ask tough questions, go to shareholder meetings, and hold companies accountable for their actions.
That's a good point. It's easy to feel small in the stock market, but we have more power than we think.
You do. Informed investors can make a difference. Now, speaking of navigating the market, let's talk about something really important. Diversification.
Diversification. I know it's important, but remind me why.
It's like this. You wouldn't put all your eggs in one basket. The market, it's unpredictable, right? We've seen that diversifying your portfolio, spreading it across different types of assets, sectors, and regions helps reduce risk.
So if one part of the market crashes, my whole portfolio isn't wiped out.
Exactly. Diversification helps soften the impact and smooth out the ups and downs. You can ride out the storms and focus on your long-term goals.
Like a safety net for your investments. Especially important now with all the uncertainty in the world.
Absolutely. It can give you peace of mind and help you stay on track, even when the market throws curveballs your way.
This has been really insightful. You've given me a lot to think about as we head into Monday. Any last words of wisdom before we move to our final segment?
Remember, knowledge is power. The more you know about what drives the market, the better decisions you can make. Stay curious, keep learning, and never be afraid to ask questions.
Couldn't agree more. Knowing what's going on is key, especially with the financial markets always changing. And speaking of change, in our final segment, we'll be exploring potential opportunities that might come from all this volatility. Stick with us. Okay, so we've talked about Friday's crazy market swings, what's causing them, and what to watch for next week. But now for the fun part, what about potential opportunities?
Right, because even with all this uncertainty and volatility, there are always opportunities if you know where to look.
Exactly. So where are you seeing potential right now? What's catching your eye?
Well, let's start with tech. It took a hit on Friday, but I think long-term, technology is still looking strong. We're seeing huge advancements in AI, cloud computing, all these transformative fields.
And NVIDIA, even with that recent dip, it's still done amazingly well this year.
Exactly. NVIDIA is a great example of a company that's set to benefit from these tech trends. They're leading in AI and high-performance computing, things that every industry needs. So yeah, tech might be a bit shaky right now, but the long-term potential is definitely there.
So for investors who are patient and believe in innovation, tech could still be a good bet. What else are you looking at?
Renewable energy, that's another sector with a ton of potential. This global shift towards clean energy, it's creating huge opportunities for companies in solar, wind, all those renewable technologies.
And we saw Northvolt, that Swedish battery maker, get a bunch of funding for a new plant in Germany. Shows that investors are serious about this sector.
Definitely, and that's just one example. There's so much investment pouring into renewable energy. As governments and companies focus on sustainability, we'll see this trend keep growing.
So for investors who want their money to reflect their values and maybe profit from a growing market, renewable energy could be a smart move.
For sure. Now let's switch gears a bit and talk about a different approach, something called value investing.
Value investing, you mean looking at those companies that the market might be undervaluing, the ones people often overlook?
Exactly. When things are volatile, good companies can get caught in the middle and their stock prices drop even if their business is still strong. That's where value investors come in. They buy low, hoping the market will eventually see the company's true worth.
Like finding hidden treasure in all the market chaos.
You could say that. But it's not just about finding cheap stocks. Value investing takes research and understanding a company's fundamentals, their finances, their management, their position in the market.
So it's not just about the current stock price. It's about figuring out if a company will be successful in the long run.
Exactly. Value investing requires patience, discipline, and being willing to go against what everyone else is doing. It's not for everyone, but if you're in it for the long haul and you believe in good research, it can be very rewarding.
Okay, so we've got tech, renewable energy, and value investing. Anything else you're seeing out there?
One last thought, keep an eye on emerging markets. They can be volatile, but they also have huge growth potential.
We talked about China, but are there other emerging markets worth looking into?
India is definitely one to watch. Their economy is growing fast and their middle class is booming. Southeast Asia and Latin America also have some interesting opportunities, each with their own unique possibilities.
So for investors who are comfortable with a bit more risk, emerging markets could be a way to diversify and potentially get big returns.
That's right. But like with any investment, do your research before jumping into emerging markets. Understand the politics, the economy, the regulations, and the risks.
This has been a fantastic deep dive. You've given us a lot to think about and some potential paths to consider as we navigate these uncertain times.
You got it. Just remember, uncertainty can be scary, but it can also create opportunities. Stay informed, do your research, and be ready to act when you see something that fits your goals and your risk tolerance.
Great advice. And as always, we encourage you, our listeners, to stay engaged, keep asking questions, and never stop learning. The financial world's always changing. The more you know, the better decisions you can make.
Absolutely. Curiosity and wanting to learn are so important for any investor, especially now with everything changing so fast.
Couldn't agree more. Thanks for joining us for this deep dive into the U.S. market and beyond. We'll be back soon with another exciting exploration of the financial world. Until then, happy investing.
Happy investing.